Well, hello, everybody. It is a wonderful weekend during the baseball playoffs, and we have an incredible show for you today. If you saw the last one, we were teetering on the edge. We are still teetering on the edge, but looks like we're deciding which way to go. Now, if you want to see which way we're going, you're just going to have to tune in the next show. I am so excited. I just can't hide it, but I want to congratulate the LA Lakers because we are the champions. We are the champions. Okay, let's get back to the regular scheduled program. In any event, I am at Dodger Stadium right now. There are not a whole lot of fans, but as you can see, the fans behind me, this guy with the mask is not that guy. This guy with the mask is really, really irritating the crap out of me. You know, look at that, spilling beer. He's already spilled it on me a couple times. They can't even hold it like this guy can hold it in. Anyway, to hell with that. We're going to start with what is one of the most important shows we will have ever put on. And I don't say that because, you know, everybody likes to exaggerate. This is the best fight of the century. Yeah, it's always the fight of the century. But when the market tops after a 12-year, 500% bull market, I'd call that significant. So let's start looking at the Dow here, which is the first one we did. And the Dow is, the Dow for a while made a decent looking uptrend like that for a while. You know, that's a great looking uptrend until you break it. And you break it by doing something like this. This little hole was a breakthrough through that uptrend. And so now you have a downtrend, which is a top below a top below a top and a low below low. That defines a downtrend, and the opposite defines an uptrend. And you can learn all about that in the Chart Foundation series, which is just coming out. So I would like to continue to move on with the Dow here, because last time I told you, I hypothesized that we were in the right shoulder of a head and shoulders pattern. And this looks really close, but not the way I'd like it to look. I'd like it to look a little differently. So one of the things I want to tell you about is the importance of taking your money off the table before it takes it off of you. Now, in the case of the Dow, we're here. Okay, I just drew that little red line. If we should exceed this, I would say at that point, then I would be in cash and cash only, and just sit and wait and sit and wait and sit and wait and sit and wait and sit and wait. And don't be as repetitive as me, because I like to sit and wait. So let's keep going here. This is the next one is, of course, the NASDAQ 100. NASDAQ 100 being the company, the exchange that brings us the Teslas of the world, the NVIDIAs of the world, which are the key gaming chips that are worth like $1 billion each. These are the fastest chips known to man. Intel is and also ran, used to be the chip leader. And what I want to say is that these stocks like Amazon, Microsoft, and Facebook, they don't have that much business. I don't know how they can. They're reporting earnings coming up in the week, but an earnings report, if you've ever read one, and I have, they are the biggest pieces of fiction ever. So you have to sit there and actually put the CEO under a lie detector, or the CFO, before you get any type of reasonable answer. There's always reserves for, fallen down horseshoes. Oh, I'm sorry, our earnings are suffering from one-time only breakage of our wine glasses. And that's going to reduce earnings by 50% this month only. But then the next month they kill earnings because they didn't break any wine glasses. That's how Wall Street works. They like to pretend that all the crap is happening right now. They lower their earnings reports. Oh yeah, we were going to earn 90 cents, not a dollar, 80. Did I say 80? No, I meant 60. 60. Did I mean 40? No, I meant 30. And by the time the quarter rolls around, they earn 31 cents. They have to do a bunch of chicanery to get to 31 cents. But the street goes, yeah, they all beat the street estimate. That's how Wall Street works, fellows. And here, you're here because you're not going to be informed. You're not going to be misled. You're going to be informed. You're going to be educated. You're going to be there's education, information, and not one bit of fabrication. I am not going to be selling you a damn thing except for my expertise. And if I must say so myself, and I am, because I'm in a very, very, very modest mode, worth a lot more than you're being charged. Okay, let's just put it that way. All right, so on the next one, I'm in a little bit of a bravado type of thing today, in case you didn't notice. Let's see. So let's go to the next chart. Oops, I screwed that one up. Next chart is Apfelstrudel. I call it Apfelstrudel because I don't know what else the hell to call it. I mean, this company basically is bigger than probably the GDP of half of the world. And why it is that no one has sought fit to look into it kind of leads me to believe that they have a very powerful presence in Washington, D.C. that precludes that. And I'm going to play them a little guitar strum to that. Boom, 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 boom. Apple, congratulations. But I'm taking a bite of that apple. It probably the same bite that, was it Eve or is it Adam that took that, Josh? The bite of the apple?
I think it was Eve.
Yeah, Eve. It figures. Eve took the bite of the apple, and boy, things have sucked ever since. You knew we were going to have to wear masks someday because of Eve. It's her fault, not Trump's. Anyway, here we go. We're going to continue on to Amazon. We're going to continue to Amazon. Amazon is the picture perfect head and shoulders. I mean, you cannot draw a I gotta seize it here, but you cannot draw a more picture perfect head and shoulders pattern if your life depended on it. I mean, I can't draw to save my life, but assuming I knew how to draw, that would be what was called the neckline. And if you break below 2,900, I would not be holding it. I would not be holding it anyway. I think if you're holding it right now, what you're saying to yourself, well, I hope it goes up, but you know what? Hope sucks. It doesn't make a good friend. It doesn't do shit for you. I hope you bleeped that out, Josh. That's not supposed to be on the FCC guidelines, but oh well.
We'll get it in editing.
We tell it like it is, folks. I'm sorry, but the thing is, if you look at the right side of Apple's shoulder, I've mentioned before something called an island top. An island top occurs when the stock gaps up. It gaps up and then trades in the same range, and then the next day gaps down. That means it is exhausted. And Apple is starting to show signs of exhaustion. Look at that big move right here. It's going to take one more move. I wouldn't be surprised. Now, I'm not predicting it, but I wouldn't be surprised if on Monday Apple gapped through this and none of you could sell out of it. That's what happened to me on AGQ, and that's frequent. That's why where you position yourself is so important, because the odds not only include your chances of success, but they include avoiding these pitfalls like gapping through certain things where you can't make a trade and you're stuck in no man's land. Now, I've shown you how I got stuck in no man's land. I'm going to tell you how I got out of it. All right, so the next one is good old Facebook. Facebook, the place where they can hire only fact checkers and they can't hire regular employees. And the fact checkers are told basically, don't check facts, whatever they are, put the opposite in. And the people that really know what they're doing about are not, if they are qualified because they have a high IQ or did well on standardized test scores, they are not a candidate for hire at Facebook. So Facebook also, oops, did that stupidly. Facebook also has, what do you call it? I don't even want to call it anymore. Face, head and shoulders. Blah. All right. Next one is as we say en français, les Google est numéro un, followed by a million zeros. I think that's a Google. And if you actually look it up, it's either a million or a billion. And there's something called a Google Plus. And a Google Plus is it's like a million. It's like 1 to the million to the millionth. Now imagine how big of a number that is. Josh barely has more money than that. Barely. We counted it the other night and there were 2 cents left over, believe it or not. So this one, Google is a very important company because of people use it. It's also a very important advertising company, but it looks exactly the same as the rest. And Tesla doesn't, believe it or not. I keep hating this company, and anybody that's read my prior stuff has basically read from a person who just doesn't believe. Elon Musk has got to be the most brilliant and or Barnum and Bailey type of huckster I've ever seen. Now, on the one hand, and it reminds me of a song I'd like to sing. And Josh, Elon wears his war wound like a crown. He calls his child Jesus. Oh, that's from Levon, from Elton John. I forget it. Josh doesn't know shit. So anyway, Elon, God, I don't even know. Ace, see, I pissed Ace off so much. He hates that. Shut up, Ace. Who cares about your opinion? Okay, so now we're going to go on to Tesla. And what you see about Tesla is that it's actually not in a bad pattern. I mean, it's really looking, if I were to not know anything else, I would think Tesla was a buy here. But what I do know is it's not a buy here. This company is worth like $1 million per car sold. Is that a good deal when Toyota's worth like $1,000 per car sold? I don't know. There's something's going to happen here. I just don't know what it is. In this case, we're looking at UGL. I've been pounding the table for a long time about precious metals. And I am happy to say that I'm no longer getting all that hate mail. Like, let me reach over here for a second. And I mean, look at this. Look at this. How am I supposed to answer all this crap? And a lot of it is threatening me that if I don't get things right, they don't make a lot of money, they're going to keep sending these. Well, keep sending them. I love them. Actually, I love them. My secretary loves to read them. And a lot of you women out there that want somebody cool to go out with, yeah, I don't mind getting those letters either, because if I was a woman, I'd be all over me. Let's face it. Okay, back to reality. As Eminem would say, back to reality. Oops, there goes gravity. Now, we are looking at UGL. The thing about UGL that's kind of cool is that UGL is the double leverage ETF for gold. So this is a gold representation. Now, I should put it in green, actually, because this one I've gone back and forth all the time with. It's either been a positive or a negative flag. I don't know. Now, you see this little doohickey at the end? Let me show you this, this doohickey. I'll use the magnifier so that you guys can see how cool a magnifier is. Oh, I didn't use a magnifier. Let me try that one more time. Let's see. Magnifier. There we go. Okay, so you look at the magnifier. Look at that. Now, it almost broke out, but then it broke down. And that's not good. I mean, it's a very, very mixed bag with precious metals. So I'm going to show you some more just like that. This is silver. This is the one where I got my butt kicked. And I'm not going to repeat that anymore because I'm tired of admitting that I'm wrong all the time. But ACG is going to be a great long-term hold. The only reason that I got my butt kicked is because I try to scalp. You know, when you try for too quick of a profit, you try to scalp a little too much. This is where you get yourself into trouble. You hold this for 10 years, you're rich. AGL had this gap right here. I held it. I was actually very bullish right there. And it had this gap right here with almost no trades in between. 40% loss. By the time you blinked your eye, it was my biggest position. And boy, was I sick for the next 2 nights. But that's in the past, so I can pretend it never happened. So we're going to go on to the miners. These are the gold miners. These have held up much better than gold or silver. The reason I put them up is because I think the gold miners and gold and silver are telling us two different things. And that's what's weird. Normally, they're on the same page, but they're not now. The gold miners kind of look like this, and all of them look like this. There are even some that broke out to new highs. So I don't know. And this one didn't have such a good day either. Now, gold and silver were just puked on Friday. So I don't know. What I'm gonna say to you about is that they're great gold miners to be held long term. Now's not the time to buy, but next week might be the time to buy, and the next program might be the time to buy. So this is Kinross. I've talked about this before. Note the thing about Kinross. This is what I want to tell you about long term for short term holding and buying. Kinross is in a great consolidation. It even made a new high right here, which is really good considering gold was, kind of consolidating and wavering around. Kinross, on the other hand, made a great new high. And this is the kind of company, when gold is ready and precious metals are ready to start their uplift, and they will be, this is what you look at. You look at companies that are relatively strong, a relatively strong group. And so that's the reason I'm going to put a couple of these up there. There's another one called Eldorado Gold. I've talked about it in the past. Now, if you look at the monthly, look how far up it is to go. Look at that. That thing could go way the hell up there. And, yes, Ace, I know what you think about Eldorado Gold. And so do they, by the way. So this is Eldorado Gold on a monthly. And here's Eldorado Gold on a monthly looks like that. So a lot of these companies that you're looking at, these little miners, they may have like Hecla. For example, Hecla is has not been a well thought of miner, but when you have silver prices doubling and gold prices halving, oil prices halving, oil is the biggest input to mining gold and silver. So, you got profits all of a sudden. Hecla also looks good. It's a silver company, and it's in one of those. I originally thought it was in one of these, and that's where the art comes into place. Because with Hecla, you could easily have drawn that and expected it to go like that, and it didn't. So you have to be very careful about everything lining up right. Sometimes they line up right and you're still wrong, but your chances of being right when things are lined up right are really good. The next one is the dollar, UUP. This is a ETF for the dollar. What we noted is that last time we didn't do such a good job of, kind of keeping in mind that it was pretty important. And it formed a rounded bottom, which I just drew. Then it went up a little bit, broke out, and now it's kind of coming back. So again, we are in a no man's land of whether to buy precious metals or not. So we're going to follow this very carefully. If I were to tell you my gut feel is that we are going to rally, but not yet. So, what I would say is keep your powder dry, have the liquidity to buy at the right time. Don't be sitting there and panicking and selling while everybody else is, because then you're not going to buy anything. And you want to buy them cheap. Want to buy low, sell high. Buy low, sell high. All right, this is the 5-year treasury. Remember I told you on the last edition that these guys are going to fool everybody. Everyone you read out there says gold's going negative, gold's going to zero, gold's going this, gold's going that. I'm sorry, interest rates are doing that. I didn't mean gold. Interest rates are going to zero. Interest rates are going negative. Well, they're not. Sorry, they look like they were, but they're not. This is the 5-year, okay? If I draw 5-year, look at that beautiful rounded bottom. Now, that doesn't mean that the 5-year treasury is going to rally soon in terms of interest rates, but it does mean this. Interest rates have bottom, okay? It's time to fix your mortgage. It's time to fix all your leases, and it's time to put everything that costs that you earn on variable. In other words, if you earn something that is variable and that escalates with inflation, I'd get that. If you have a flat lease, I would get that and get it as long as possible, because we are going to see prices go up, and in about 10 years, you're going to be paying every bill with confetti. All right. This is the 10-year treasury. Same kind of thing. Just showed you the same pattern. It's a bottoming pattern. It is another reason interest rates are going up, not down. This is a 30-year. Even looks better than the other ones. I'll just draw one in for the hell of it. But I mean, it's even more rounded. And I would also say that this right here, this is a breakout. This thing's going, here. You know what I'm going to do? I'm going to put in an arrow. I love those arrows. They're so cool. All right, so let's put an arrow in. Arrow, boom. There we go. See, now I can move the arrow. No, I can't move the arrow. Oh, well, tell with it. I thought I could move the arrow. I could move the arrow. What's wrong with you? Come on. Arrow. There we go. See, and that's what we use the arrow for. It's to point you to where it broke out and why that is such an important spot. Not only that, they're straight, and as you can tell, I got a C in penmanship, and that's an exaggeration. So, in any event, let's move on. Interest rates are going up. Keep that in mind. Up, 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 up. We're on the Kospi. This is the South Korea exchange. You know, basically, it went from a positive pattern, which I said last time, to a very negative pattern. And that's it. It's going to break down. It's going to break down along with the rest of the world. That's about it. So, and now, we're going to move over to the Hong Kong. Boy, does that look like crap. And Hong Kong exports everything. Finally, last two charts are one is going to be the Shanghai, and I love this one. I showed this one last time by month, by year. And this thing, it looks like China is so powerful. The only thing they're powerful for is making China and flus. They're very good at making flus. I got to admit that. If there was an Olympic medal for flu making, I think they would get it. But the smog at Beijing will not allow that. Okay, next one. I'm going to give you one idea of what you might want to look at and buy. I have talked endlessly about how bad the financials look. And this is a double anti-ETF of the financials. Remember the Berkshire Hathaway chart that I presented on last episode? If you don't, you got to check a look at it, because I'll tell you, that chart looks so bad. It's a bank holding company. So if you think that financials are the worst, and I do, this is the play to go. It's called SKF. It's a double inverse financials ETF. And this is one I take a look at as we're getting ready to position ourselves at good points. That's it for today, everybody. I am so excited. I just can't hide it. I'm about to lose control, and I just can't whatever it is. Anyway, we're going to have a great show on either Tuesday or Wednesday, depending on how the market goes. We might wait a day till Wednesday. We always try to do it at a time where it really makes sense. And with that, be informed, not misled. This is the only place that gives you information, education, no fabrication, and no sales BS that you're going to get from Wall Street.